Good day everyone, my name is Les, I'm Chief Analyst of BG Trading Australia. Today is 22nd of April 2024 and I will be reviewing S&P ASX200 followed by lithium stock. What's happening with the lithium markets? What are the stocks that we should be looking at, if any? And our most traded stocks back in 2021, 2022 and 23. What's happening with those stocks, whether there's any opportunity to buy or we should just be waiting on the sidelines as the narrative about EV cars continues to generate negative momentum. Let's have a look. Just want to remind you, this is not a financial advice, just us from BG Trading sharing with you how we apply BGS 20 strategies to chase 20 to 40% within 1 to 3 month lead time together with our VIP members. I'd like to invite you to become a part of our free Facebook community. Buy, grow, sell strategy for share traders is free. And we post a lot of great quality content, including some stock analysis. We every week are updating the market with some compelling information and also discussing with our members. We have a chat on this particular community which discussed with our members potential stocks opportunities, stocks that are trading at technically discounted price and that could offer 20 to 40% plus within a 1 to 3 month time. Make sure you get involved with that. So now let's go with S&P ASX200 first. And as you can see here, I'm being still bearish about S&P ASX 200. It looks like it has recently bounced, like today actually bounced on this hypothetical support level there. The question is whether this is gonna hold or if we will see the S&P ASX 200 moving towards the SMA 250, which is exactly at this pink line level right here that I'm highlighting for you. So I was expecting, if you watch my video last week, I was expecting this correction. We have bearish intersection level 1 here, which is highlighting this red bearish cross between the EMA and the SMA 40. When we have a bearish intersection, we gotta make sure we are reduced in our exposure to the market. Where is this bearish intersection? This is the first bearish intersection since since November, bullish intersection. So generally what happens is we detect a bullish and bearish intersection according to BGS 20 strategy, and then we start building up into long positions when we have a bullish intersection, and we start reducing our positions once we have a bearish intersection, as highlighted there. The question is, would this hypothetical support hold the S&P ASX 200 index, or we will see the index falling towards this SMA 250? My ideal scenario is, and I really like to see the S&P ASX 200 falling towards 7,300 levels, and then I will be very comfortable to start buying back on our positions and opening large positions once again. At the moment we are highly reduced, we are holding cash and then waiting for a potential bounce or for the market to trade at technically discounted price once again. This sell-off is to do with macroeconomic facts, especially in the US, and is directly related to inflation. So as inflation came higher than expected, the hopes for US to cut rates has been fading. Therefore, this market correction, especially on the tech and the growth stocks, that's where the majority of the risks are at the moment, and I think we are the two things we need to do is first of all is not look too closely to tech and growth stocks at the moment, and look into material stocks. Now let's jump into I'm still bearish, just so you know. Let's jump into the material lithium stocks. So we're gonna go through our watch list and start with the leading stocks, PILBARA Minerals, which is a company that is still profitable even though lithium stocks are down. So if you look at the chart here, PILBARA Minerals start sort of working in like trading into consolidation, ascending consolidation mode. Still technically in what we call sideways, and it is a technically discounted price. In fact, most of the sector is currently trading at technically discounted price, not just for the long term but the short term period as well, which for us is a buying area. For us really comes down to, okay, pick up the best stock among the sector, and PILBARA is the number one pick for sure at the moment in the current narrative of lithium EV. If you have been reading the media, the narrative towards EV is that the sales has been collapsing in the US and across the world, and they're now talking hybrid as the future solution. There's a lot of a negative narrative, and then obviously that ultimately brings a bearish outlook for lithium prices. If you look at the lithium prices at the moment, it's trading steady, not much excitement. The markets are struggle to rebound, but as you can see here, is sort of trading steady, which is not too bad. What we don't want to see is the further collapse. Ideally, we want to be seeing a further upside. The problem with this situation is it takes a lot of time for the market to digest. First of all, the narrative of the sales going down, EV sales going down, and it will take a lot of time for the market to actually digest the fact that companies are that lithium still could be in a shortfall for the upcoming years. The problem here is the short term. Are we able to profit 20% in the short term? And the answer is potentially, if lithium prices bounce and this narrative shifts towards something else. I haven't seen a huge capital inflow into lithium stocks yet. PILBARA still remains as the most short traded stock on ASX at the moment, with over 20% of the shares being short traded at the moment. So the market still thinks we could fall further. The flip side is obviously if there is a short squeeze, now those stocks are going to bounce fairly quickly. At the moment, the number one pick is PILBARA, which is there, and then second one to look at is Mineral Resources Australia. It's still a slow mover. All those stocks now are still low mover, not expecting to have a material change on the share price. But if you look at the chart formation here, it's constructive, and it's trading above. A little bit above both moving average, which puts Mineral Resources back into a bullish trend, and we like that. So that's why this is also our favorite, one of our favorite stocks. So Mineral Resources, favorite stock, but I wouldn't be buying. We are actually holding this stock, just so you know. But I would be buying more unless it's start trading under those two moving average at technically discounted price. At the moment, it's trading at technically fair price. In a bearish market, it's never a good idea to have increase position at technically fair price unless you have extremely bullish outlook, which is not the case now. Remembering that mineral resources is highly diversified. If you buy mineral resources, you'll be highly diversified into iron ore and lithium. So lithium and iron ore. Iron ore markets stocks are impressively moving upwards at the moment. So that's what has caused this rally on mineral resources as well. So it's positive outlook for mineral resources, on my opinion, with the downtrend has been broken, and I'm expecting further upside right there. Our VIP members know exactly where the target is. We don't hold the stock forever. We wait until it reaches the target. Once the target is reached, we exit and look into the next trade, potentially in another sector or on the same sector or in a different stock. Okay, so the next one is IGO. IGO is also diversified in different base metals and lithium. So if you look into the RSI is definitely showing some bullish divergence, which is positive. So IGO is looking positive here, trading a technically discounted price for the short term and for the long term, puts IGO in one of the favorite spots here among PILBARA minerals and mineral resources as well. So those three stocks, you can pick any of those three stocks and you will have a world-class exposure on ASX for lithium. Okay, and again, if you only want a lithium, PILBARA. If you want some more diversified exposure to lithium, then you can go with mineral resources and IGO. So this is an entry opportunity at the moment, on our opinion. We don't see a lot of upside at the moment. It could take a while, it could take months to reach a target. But anyone wants to have exposure, you could be looking at buying that. Obviously, stop loss has to be set under this sort of hypothetical support level. Volumes are really low, which is not very positive. Doesn't show a lot of action. Again, enhances the fact that we think that could be trading sideways for quite some time. Not much money to be made, I think, in lithium at the moment. Not for the short term. So now we're going to be looking to a more speculative stocks that we have been trading. So the first one is Lithium. Lithium is obviously one of the biggest disappointment, because the company has positioned itself back in 2020, 2021 and 22 as the next Australian lithium producer, and they have recently informed that they were ceasing its mining operations temporarily with no further notice in our territory. So a lot of people lost jobs. And that obviously has contributed for the stock to keep falling. So at the moment, I would not be looking at touching in the Lithium. Lithium, since it stopped mining lithium, is no longer a lithium exposure for us, and I don't even see Lithium anymore as a core or as a lithium stock. At least until they look into restart the production. But the capex for restarting the production, the mining operation, pretty high. Sorry, and I think that's I won't see this stock bouncing for quite some time, and we could even see Lithium under 10 cents together with Lake Resources and SAYONA Mining, which, by the way, are the next three stocks that we're going to be looking at. So now let's take a look at Lake Resources, which was at some stage marked down, and the stock reached levels beyond $2, now trading at 5 cents. Impressively top 5 cents. Look at the chart formation. That's a sad story with some misleading management, selling its share at the top, making a lot of money, and leaving the company and the shareholder for death. And the new management and really trying to get the company project online, but the problem is huge capex, over $1 billion capex to put the project online, and that is pretty negative. And then the companies now struggle to raise capital to keep afloat. So this is the stock, this is a company that I struggle to believe that they're going to succeed. I wouldn't be looking buying this stock at all. I think they could go under. So just very careful with Lake Resources at the moment until the management shows more confidence. I'm not really looking to try speculative position on this particular stock. See how the capital raising will perform. Very likely they struggle because they have extended actually its lead time for the capital raising. So now let's move to SAYONA Mining. SAYONA Mining produces in Canada, in Quebec, and they have recently announced about being escalating its production, so increasing production. But the problem with this company is they made huge losses year on year, even though it's producing. For us, it is now a better peak than, definitely a better peak than Lake and Lithium. However, all we need is the company to announce they're going to cease production or mining, and we will see the share price collapsing. So it's already collapsed from 20-30 cents to 3 cents. Will I be buying this? Not really. I think the time now is really to stick with the leading companies until we see a major reversal into lithium markets when you wanted to stick with the leadings. The chart formation looks very bearish. The stock has broke out its hypothetical support level, and there's no indication of a reversal. I would not be touching into this particular stock at all. You see, this is when they broke out. Until we see not a reversal on the stock itself, but a reversal into the narrative and serious lack of supply on the lithium. And that's what I said before. We need time, and sometimes not take only months but years for a particular industry to go in the scarcity of supply. So what happened with this industry is that since a lot of projects has came online, and small companies will be shutting down its production, as we saw for lithium, then we will see shrinking supply. But that will take time for the market to digest. When people realize, that's when we're going to see the lithium prices bouncing again. At the moment, the lithium prices is moving sideways. I see no signs of a huge rally until we see, as I said, further confirmation. So I won't be touching on this particular stock. Another one that is good, people like it, it's Vulcan Energy. VUL. Vulcan Energy is once also darling on the lithium sector. The chart formation looks a lot more promising than the other ones. So if you wanted to look into speculative stocks, so take a look on Vulcan Energy. And looking to buy the stock at technically discounted price, not at these levels here. Gotta be under this red line and the pink line altogether. That will give you a much better upside. Because if you're buying now, so and the stock falls at the buying area, you'll be down by 10% already. And that should have been your stop loss. Okay. In this case, wait for the stock to come down under 280 sort of level, and then attempt to buy with a very tight stop loss and set up a target of 20%, which would be around this sort of level here. It's feasible on this particular chart formation. So Vulcan is our #1 pick on a speculative stocks at the moment. This company has been receiving a lot of funds from European governments. It's very likely to see they coming online. So this is probably our major pick. Now, the next one we want to take a look is a company that has a very, very good project, which is very good project, which is LIONTOWN. It is trading at technically discounted price at entry level right here, and the RSI looks also positive. The problem here, they don't produce, and they play as a speculative stock. So you just gotta make sure if you're going to buy this stock, this is the time to buy at technically discounted price. But you will need to experience a rally on lithium prices in order to see this stock going up, or a potential catalyst information or announcement by the company, or another company trying to take over LIONTOWN. It's offering value at the moment, but something that doesn't produce in a high interest rate environment and the lithium price is down, offers a lot of risk. So just be careful with LIONTOWN. Okay. Next one is ARGOSY Minerals, which is a stock that a lot of retail investors like to trade. AGY. Okay. Very low liquidity, very low volumes. That's why the stock moves quite a lot. But the chart formation looks a lot more promising than SAYONA mining and all the other stocks that we have seen except for Vol. Would I be buying this stock now? Not really. Sticking with the leaders at the moment. But if you want to try speculative stock, this would be our second pick. So Vol is the first one, and then AGY our second pick. As the stock's trading at technically discounted price, the RSI it's looking bullish, and this stock has a lot of traction towards retail investors, as I said before. There is also a range of 20% from the current share price, actually 43%. So I would put it about 30% and sell at 18 if I was to trade this particular stock now. Again, you need some traction on the lithium prices. As you saw, lithium prices has came back, and that's where we saw this rally in majority of the stocks. See? But now, if it's going to trade sideways, we could see those stocks keep trading on the same sort of level with very low volume, as we can see here. Okay, so market is still hungry for lithium stocks, but I don't think anything is going to happen until a major event. And that brings us to the end of this video. Hope that was valuable, and hope to see you in the next video. Bye.